Hey everybody, welcome. It's Pete. Welcome to today's episode of Stocks for Breakfast. It is Wednesday, March 18th, 2020. Pretty good day yesterday in the market. I hope you watched yesterday's video. We actually called the market perfectly yesterday, right up for the first few hours of the day. I'm going to touch on it briefly. And again, I say it every day. I hate when people do prognostications about what they would have done yesterday, but we called it. If you watched yesterday's video, which I hope you did, I want to review that setup again so that you're prepared for it today, whether it's on the long side or on the bearish side. So the long side meaning a buyer, the bearish side meaning a seller. We actually all of the good vibes that happened yesterday in the market are completely gone. We're actually limit down again today. So if you've been following my suggestions, it's the only way I want to word it, we're in day trading mode right now. If you're not a day trader and you have some longer term positions, you're in the same boat as everybody else right now. But initiating new swing trades or holding new trades overnight, it's just the market's just not calling for that. However, the market is calling for some really amazing day trading opportunities. But before I do that, I keep every day I keep talking about this book. See if I can get it in there. It is Tape Reading and Market Tactics by Humphrey B. Neal. It's not an expensive book. I'll put a link below in the description. It was written, I believe, in 1937 or something like that. It just does a really good job of teaching you the basics of tape reading and understanding price action and volume. So I wanted to do that. I had a couple of emails about that. But today we're actually going to review. We're going to go through a list of stocks using the daily charts and see if there's anything interesting that we could set up today. We might be in bearish mode today. Yesterday we were in looking for a bottom. We actually called the 2380 level, what would happen at the 2380 level, and we actually peaked below it a little bit. But if you remember what I said in the video, and especially in yesterday's Smart Money Alerts email, which by the way, that's a free daily subscription. I'll post that link below too. You definitely want to get that. It goes out every day at 7:30 because it gives a little bit of depth to what's in the video. Today we have a unique situation where all of that bullish enthusiasm has now turned into the reality of the stimulus plans are just not. It's a long-term problem. I don't know if you saw the president yesterday. We were talking about this could last through July and August. Ironically, yesterday I had to postpone my wedding, which was supposed to be in May. So if you didn't get your invite, that's why. So what we're going to do today is we're going to do a very quick review of yesterday. And gosh, I hope that you watched yesterday's video because we talked about watching certain levels. And even if you missed the first monster bullish move yesterday, there was such a textbook move in the afternoon that I really hope you got it. I'll just use the SPY as an example. A $10 move in the SPY in the afternoon that literally pulled back to the penny where we were discussing. So again, if you like these videos, it would mean a lot to me if you can click down and click subscribe so you get alerts. You can either click that little bell there. And also, if you have some time today, just scroll down into the description and you can make sure you get on the daily emails, okay? So we're going to shoot right over to the screen and we're going to see what's going on. First, we're just going to take a look at the headline. Stock futures plummet, triggering a trading halt. And that's actually what this looks like again. Unfortunately, I haven't seen anything like this in a long time where future, not so much the moves to the downside, but trading halts. And they're put in for a good reason. It's to slow down the tide of massive buying and massive selling. And this is just, massive selling. That's what's going on right now. So we don't need to harp on the news really that much. It's pretty evident what it is. They're talking here about, this is Investors Business Daily, talking about watching Amazon and Apple. We're going to actually take a look at some stocks in a second. And not only that, we're actually going to do some scans as well. I want to come back to the screen just 1 second. I actually had somebody ask me in an email the other day, if the market's going down really fast, why would anybody be looking to buy it? Well, first of all, there are absolutely, and I'm talking about going down. I'm not talking about going up like yesterday. On the way down, especially, New York Stock Exchange specialists and NASDAQ market makers, it's literally their job to take the opposite side of a trade to provide liquidity. the definition of their job is to provide a fair and orderly market. So if we're going down super fast and there's nobody on the other side of the trade, or even quite honestly on the opposite side where we're going up super fast and there's nobody on the other side of the trade, it's their job to take the other side of the trade to provide liquidity. So I think it's a really good question. I don't remember who it was. There was somebody a couple of days ago. We've been getting a lot of emails, which, by the way, keep sending them. My email's always in the description. I get back to you right away during the day. So that's the reason somebody's actually on the other side. So we're going to go right back to the charts. Excuse me. And first thing I want to do is I want to point out, I'm going to pull up the SPY, and you're going to be just crazy amazed at what we talked about yesterday. So I'm going to zoom out a little bit here. Now, if you remember what I said yesterday, we were specifically talking about, I'm going to actually go to the ES and just give you a very quick review of what we talked about yesterday. We actually said that 2380, and you'll see why. 2380 was a level the market kept holding. I said, if we hold it, awesome. If we trade below it, watch. If we come back, that's going to matter. It could be a very fast spike, and that's actually what we ended up getting. So we're going to take a look and see how that translated into making money yesterday. I'm actually going to remove this from the screen for right now, just so we can have a better view of what we're looking at. So here's the opening price. And again, that means it's the opening print of the day. It's the main barometer of what I watch, on top of yesterday's high and low. In normal market conditions, we'd be adding much longer term arguments to it, right? We'd be adding moving averages, trend lines, and sectors, and all of that kind of stuff. We're just in today only mode kind of right now. So anyway, we actually traded below the perceived support level that we noticed yesterday, but then we actually did. We traded right back through it, and we said if that happens, there's going to be a lot of people caught off guard. And let's just say, for argument's sake, you didn't catch this move from here to here, or you were uncomfortable buying, which I completely get. It's a professional trader's market where you got to have some activity. But again, I want to prepare you for today's market, how to trade today. So if you get to the point now where we're rallying back, you have to say to yourself, what would be the minimum criteria that would make me consider buying? So if you actually look here, this first close above the opening price, that's the first quote unquote proof that stocks today have now reached a bullish tone. So again, the opening price tells us today's order flow, and when today's order flow under good conditions matches long-term order flow, those are the trades where you start moving up the scale towards your A+ trade, right? Remember what we said, there's your A+ trade and everything else. The closer you start moving to A+. Now, obviously, just closing above the opening price is not an A+ trade, but that's not the point. The point is I'm trying to help you have if-then scenarios for how to trade today, right? We don't want to say coulda, woulda, shoulda. You want to say, if this happens, I know what I'm definitely doing. So this would have been the first scenario where you said, okay, if I want to take a trade long today, meaning you want to buy, that would be the first scenario. Now, what's kind of smart about this trade is the risk is really minimal. And when I say the risk is minimal, is a risk is simply if you close back below there. That's it. If real breakout should follow through. If they don't, no big deal. Just get out and go to the next trade, right? But if they do follow through, you then go to, as we've been saying, you go to the higher time frames to determine if and when that stock is reversing. So we went from the 5-minute to the 15, right? So I'm going to go back to the 5 though, and I want to point out this was the first pause after this bounce to the upside, right? After this bounce to the upside. And you have this monster spike to the upside. So let's say you missed all of that, right? Let's say you missed all of it. First of all, again, remember what I'm saying about watching the previous day's high and low. Should not shock you that we found resistance there, right? So again, as we've been talking about, you should know how you're going to manage the trade before you get into the trade, at the very least. And not only for profit potential, but if you are going to add on a pause or if you're going to exit into a pause. Very important, right? So now you have this monster move and we start to pull back. Now, if you remember, I've been discussing 2 different ways to consider your next opportunity. The first one is a 50% retracement level from the previous move. So that would be from here, which is roughly 238 to 256. So that's 18 points, right? 50% of 18 points is $9. $9 off of 256 brings us right into this area. So that's the first place that you could have looked for an entry point. But here's the most exciting one to me that I really want you to be able to use today. This pullback to the opening range, pulled back almost exactly to the penny. The opening range was, what's the number there? 245. And the low of this candle, 245, 245.06. So it wasn't to the penny, but it was within 6 cents. So my point is here, you'd be looking for the opening range to hold a support. You'd be looking for a reversal candle to get proof that it stopped there. So in this case, and I'm going to zoom this out a little bit more, this is what we call a bullish U-turn. So we had support, perceived support, and I want to touch on that in a second. Perceived support, expected support. We had a bullish U-turn, which means it traded below this candle, reversed, closed back above that low, closed back above the open, and you went well bid here. So this well bid candlestick would have been the entry. It never traded above that candlestick, so there was no entry. But then you get an inside candlestick. Inside candlestick breakout, so above this candlestick is the entry. Below that candlestick would have been the exit. Trade right above it. And we're off to the races for a $10 move. Okay, now, I'm going to get emails about what about getting stopped out here. Well, let's go down to the 1 minute chart and let's see what that looks like. So that's 13:25 in the afternoon. So let's actually take a look at that as well. So we are looking, I want to try and answer everything as much as possible, right? So 13:31. This here is 13:25. So this is where the candle was, right? So we actually did not trade through that level to get stopped out. That's really the point I want to get across, okay? So anyway, let's go back out to the 5 minute chart, and then we're going to get back to today. So the next question is, how do you know when to exit this winning trade, right? How do you know when to exit this winning trade? So really the bottom line comes down to this. Entry time frame, higher time frame for your entry. So then we're going to go back out to the 15 minute chart, and you can see here we were actually well bid. This is known as a bullish engulfing candle, so it wasn't well offered. We didn't go well offered. We did not have a lower high here. Then we went well bid again, but we closed on the lows in front of today's high. So there's two reasons here to consider scaling out of your long here, actually getting out after this $10 move to the upside. The first reason is you had today's resistance, which failed at yesterday's resistance, and you actually end up having a bearish U-turn on the higher time frame. Despite the fact that it's still well bid, meaning higher highs and higher lows, you actually ended up closing near the lows. So in that case, you would have tightened up your trailing stop, and you would not have given back all of those profits. So I just wanted to make sure that you're prepared to trade today, because we're most likely going to see that on the opposite side of the market, where we're going to most likely be opening up below yesterday's low, and then we're going to use yesterday's low and today's opening price as the main numbers that we're going to be looking at today. So just briefly, I want to go through a list of some stocks that finished positive yesterday and see if there's anything to do. Amazon now, interestingly, had really good news a couple of days ago that they were hiring 100,000 more people to handle the demand. And yesterday they announced they're only going to be delivering medical supplies or household needs. So they're going to be cutting back on the other kind of stuff. What's interesting about Amazon is positive above the open 3 days in a row. You can see it's actually down a little bit, but this is a stock that might buck the trend because everybody's going to Amazon right now. Netflix, obviously, we were super pumped about it, possibly breaking through these levels. Also positive yesterday, and actually a bullish U-turn yesterday. So what we'd be watching in Netflix, we'd be watching yesterday's opening price as the level. That would be the level. So we're actually, you can see we're opening down. We're at 317 right now. So not really that far off of where it closed yesterday. So that's good too. Yesterday's open was 306.19. So again, the levels we're going to be watching today are yesterday's lows. If we trade below yesterday's lows, yesterday's opening price, today's opening range, and yesterday's high and low. Now the problem with the highs and lows right now in some of these more volatile stocks, obviously talking about a $300 stock yesterday, is the range is so wide, and it might be difficult for us to get up to those levels. However, That's the point. The point is you need to pick stocks that are the right fight for you. Everybody shouldn't be trading a $300 stock. Everybody doesn't have the capital, the risk tolerance, the experience. Pick the right fights to build your confidence, and then as your account grows, as your experience grows, then you could pick bigger fights. The one thing I have been getting emails about is, should I be trading options in the chaos so that I know what my downside risk is? Yeah, you'll absolutely know what your downside risk is, but the premiums are just through the roof, meaning they're expensive, and those guys are smart. They are not going to be selling you options that they are going to probably lose money on. So what I mean by that, we're actually going to take this back to the financial crisis, just to give you an idea of this is the financial crisis. This is where the VIX is right now. Options premiums are through the roof. So basically what I'm saying is it's very hard to make money buying options right now because of the cost is already factored into expiration, which means it's very, very expensive. I don't want to say I recommend because I'm not an advisor. I am trading stocks because it's easier for me to maintain control of my downside within the time period that I'm watching it. So again, obviously healthcare stocks have been pretty good. UNH was actually very strong prior to this mess. We're actually looking at this breakout over here. I would consider looking at that again today. So again, we have some opportunities today to get involved in stocks that if they were weak already, so you'd be looking at stocks that closed on the lows yesterday or below the open, looking at their relationship to where they are at yesterday's low. And then if they punch through yesterday's low, do they hold that low? Do you get an inside candle or a bearish U-turn or a swing high to look for a sell short? Or do those stocks hold support, do what they did yesterday, find a support level? Oh, and that's the point I wanted to make. Remember before I just said perceived support or resistance level? This is a really important lesson, one that took me a while to really grasp. When you're learning trading, you get to the point where you're like, okay, moving averages, that's where I should be buying. Moving averages, trend lines, yesterday's high and low, those are areas you expect buying to hold. Support or resistance, right? Buying or selling. So let's say you're above a moving average, pulling back, above yesterday's low, pulling back. You're at today's opening price and pulling back or pulling up, whatever it happens to be. That's where you expect price to happen. Always wait for price to confirm what you expect. So in this case here, it means if, like the example we used in the opening price, if you pull back to the opening price, then you want to see either a bullish U-turn, you want to see short-term swing low, you want to see it actually go well bid, that kind of stuff. Especially in this tape, let the market tip its hand and then get involved. And especially on the long side, like you see, we're waiting for either a bullish U-turn, a swing low, that kind of thing. Now, the one last thing I want to talk about is if you took that inside candlestick and happened to be, let's say you did take the trade and you got stopped out, but then you get another signal right away, it's okay to take the second signal, especially in this market, but in any market. If you put on a trade and you still believe it's the right idea, always remember this. Getting stopped out of a good idea is not a bad trade. It just means that you got stopped out, you paid your business expense. If the idea is still valid, put the trade back on. That's real trading. That's the difference between being a chart reader and being a tape reader, and being a trader. Real traders say, okay, I got stopped out on that one, didn't follow through. If the idea is still there, I can put the trade on. Again, now, there is a point where you read, and I know I'll get emails about this, there is a point where you say to yourself, well, I put the trade on 3 times, and it still hasn't followed through. Then you got to reevaluate, and again, that's not a hard and fast rule. That's just has something changed. But more often than not, that won't happen. If it does happen and you feel like, okay, I've done this twice and something's different, just take a step back and let the market prove itself on a higher time frame. That's the way I do it. So that's what we're looking at today. We're using the reference points of yesterday's low, excuse me, I got an itch on my nose. Yesterday's low as a reference point. If we push down, because the market's now limit down at 6:30 in the morning, push down, hold yesterday's low. We're looking for yesterday's low to give us the market tip its hand and look for sell short. If we trade below yesterday's low and rally back, that's going to be significant. Same as yesterday. So you really got to be on top of your game. If you're not sitting at a screen all day, banging the keys and trading, man, I really would not be placing orders if you're not at your screen. The market's just too volatile. You could have these wild moves back and forth just on any kind of news that gets announced. But if you're at your screen and you're trading full time and you feel like you got your game together, wow, this is a really good time to be a day trader. So, so that's what I got for today. Thank you for watching today's episode of Stocks for Breakfast. Please click down and subscribe. I'll put this book description and the link to Amazon if they're even delivering it right now. And I'll also put the link to sign up for the Smart Money Alerts in the morning so you get that email. Have a great day, everybody, and thank you so much for watching today.